Now, banks are slashing credit card limits overnight. Now, I wanted to give you guys this warning, and this is something I talked about in a previous video. A subscriber reached out to me, and they told me that Chase literally slashed all of their credit limits. So they had 3 different credit cards, a personal credit card and 2 business credit cards. The 2 business credit cards had very high limits, I think around $40,000 to $50,000 a piece. And so one of their credit cards literally went from a $50,000 limit all the way down to $1,400. They had another credit card that was around $40,000. That limit got cut all the way down to about $11,000. Now, the thing about the new limits that they got slashed down to is that those limits were barely above what their balance was. So in one case, I think they had a balance of about $11,300. And so the limit that they got dropped to was $11,500. And with their other credit limit, they had a pretty low balance. So they took the limit all the way down. Basically, Chase is only given a little bit of breathing room between what the limit is and what their current balance is. And I've been talking about this as well. This same subscriber also shared that American Express lowered their credit limit when they literally made an online transaction and they immediately got an email saying that their credit limit was lowered. Now, what does all this mean? So I'm gonna talk about the different factors on why I think this is happening and why you should be vigilant. Now, if you haven't checked your credit card statements, go ahead and log into your online banking and just double check to see if your limits got slashed. And one of the reasons why I think this is happening, because as you know, consumer debt is at an all-time high, about $1.2 trillion. I'll put up a graphic on the screen, which basically shows you how credit card debt has accelerated over the past couple of years. And I put this graphic out on the community tab a couple of days ago, how it just showed this huge upward trajectory as far as credit card debt. Now, we know what goes up eventually must come down. So I think what's going to happen, I think banks are going to start to squeeze consumers, cutting down credit limits to get a control on this debt. And I think this goes with the overall playbook that's being implemented right now with the new administration. A lot of people are losing their jobs because the federal government budget has ballooned. And so what I think is happening is that we're going to see a crash. And the reason why, a couple reasons why, consumers and government have become over bloated. And I talked about this in the video I dropped the other day where, once you see everyone talking about the same thing, that's when a bubble is brewing. When it comes to the funding, everyone talking about the Chase no doc $150,000 play. This is overhyped all over social media. So you can only imagine how many people are running up debt that they can't afford to repay using business credit. The reason why people go the business credit route is because that debt does not report on the personal credit report. But I wanted to share with you something that I discovered. So the main benefit of having business credit where it's separate, that's no longer going to be a benefit because now as the beneficial owner, your credit seeking behavior is also going to be visible. Now, what I think is that these big banks have caught on. You have to understand, they have a lot of data sources at their fingertips to really analyze and see what's going on. And as y'all know, Chase, American Express, and a lot of the top banks are part of early warning. So they're being alerted to a lot of these trends that are happening. And so they can see what consumer debt looks like because they're on the front lines. These are some of the biggest banks. And the fact that you have 2 of the biggest credit card issuers out there, Chase and American Express, now slashing limits immediately, that tells me that they see what's going on and maybe they're forecasting that we're going to have a recession. Now, the risk of having your credit limits cut is the fact that now your spending power goes down dramatically. And I think this is also part of an effort to get consumer debt under control, because what's transpired over the last couple of years is out of control spending on the consumer side, a lot of that being financed through debt, through record credit card debt. So what we have right now, I believe, is the early parts of a restructuring of the economy. And this is what we're also seeing when it comes to a lot of these government agencies, people losing their jobs, trying to shrink the budget. Now, there's a whole saying, you have to break it down to build it back up. I think that's where we're heading. Now, I think there's going to be some economic pain before we start to see some prosperity. And even Donald Trump hinted at this when he spoke on several different executive orders in order to shrink the government and get the federal budget deficit under control. I was actually speaking to my neighbor the other day who worked for a federal government agency for 11 years, and he was actually on probationary status. So he had started off as a contractor, and then once he got his citizenship, he actually was able to get a FTE, actual government position, but it was probationary, and he was just let go. And this is someone who has a PhD. So I think we're going to see a lot of retraction when it comes to the economy. Banks are lowering people's credit limits to reduce the amount of consumer debt. They're trying to put a cap on the amount of consumer debt. And if people have less spending power, then they're not going to be able to rack up as much debt. Going forward, you're not going to be able to hide the debt as effectively, because I think what banks are trying to get a handle on is seeing the full visibility when it comes to all of the debt that you're accumulating. So if you're personally guaranteeing credit cards under multiple entities, that's now going to be visible. That's now going to be within the purview of a lot of these banks and financial institutions. Now, here's what I would do to circumvent that or get ahead of the curve. Any of the top banks in the United States that are part of early warning or share data amongst each other, they're going to have visibility and insight into the amount of debt that you're holding. I would say if you have relationships with smaller banks, regional banks, or even credit unions, I would lean more on those type of accounts going forward, because it's not going to be a situation where you're carrying all this debt from the top banks and they're not going to know about it. With this particular subscriber who shared this information, they literally made a purchase on their American Express credit card. And then about 30 seconds later, they got a notification saying that their credit limit was decreased. And then the following day, they discovered that Chase also lowered the credit limits on all three of their credit cards, business and personal, in different businesses at that, not the same business. So what this tells me is that this was not specific to a particular business's debt. This was specific to the consumer behaviors of the beneficial owners, because this particular subscriber, they got their credit limits cut across multiple issuers around the same time. And not only just business, two separate businesses, but also on the personal side. Now, Chase lowered their credit limits just barely above where their balances were so that they don't have any additional credit to spend. Now, a reason why I think the major banks are going to start cutting people's credit limits is, number one, to get a handle on this all-time consumer debt. But also, when we look at mortgage rates right now, so some of y'all don't realize mortgage rates are not tied to the Federal Reserve or the Fed funds rate. The mortgage rate is actually more tied to the Treasury in the bond market, right? So I think President Trump wants mortgage rates to come down, but in order for mortgage rates to come down, there has to be some type of economic pain. If the economy keeps growing and people keep spending money financed through all-time high consumer debt, then that's not going to be a good rationale for lowering the mortgage rates. In order for the mortgage rates to come down, basically, we have to be in a recession or economic activity has to slow. People have to lose jobs. That just is what it is. So if banks are reducing credit card limits, increasing underwriting criteria to make it harder for people to accumulate more credit card debt eventually is going to go down. And the reason why it's going to go down is because there's going to be a lot of defaults. And so once that debt is charged off, it's no longer considered in that calculation. So I think a lot of the major banks are going to try to force a recession by reducing the ability for people to accumulate and spend more through credit cards. Anyways, I just want to give you guys this heads up. Let me know down in the comments section, have your limits been cut on any of your credit cards? And also just log into all your credit cards and double check, because you may not know, transaction might get declined and you don't know what the reason why. It could be because the bank reduced your credit card limits. People are losing their jobs. And even in the DMV area, they were saying that there's a ton of homes that are about to hit the market because a lot of these federal government workers are losing their jobs and can no longer afford their homes and are trying to get out before the prices actually start to go down. So I'm just letting y'all know what I've seen lately as far as the banking and the credit. And in the future, I think with as far as business credit and personal credit is going to be more intertwined, because now banks are able to have insight into the consumer credit behavior of the beneficial owner of businesses and LLCs. So it's not going to be as easy hiding debt, getting all this business credit, and there's no visibility into it. You got to remember, early warning is owned by the top banks in the United States. So they're sharing data amongst each other, and they're using artificial intelligence to get real-time insight into your debt levels. So if you're spending up on your credit card, maxing out these credit cards, they're going to know in real time what your debt looks like. And then they'll be able to alert that to other financial institutions that are part of early warning, so then they can lower all of your credit limits at the same time. So I just wanted to give you all this information. Let me know your comments and questions down below. And until next time, take it easy, and we'll talk to you soon. Peace.